Hey Puppy Trades, wanted to do a technical analysis video update on the entire semiconductor sector. For the purposes of time, we're just going to focus on Nvidia, AMD. We're going to review the Qualcomm trade. And we're going to talk a little bit about implied volatility. So let's just get right into it. A few weeks ago, I did a video update on the entire semiconductor sector. Taiwan Semiconductor and Qualcomm have taken off. Much smaller stocks in the semiconductor sector, like own semiconductor sectors. We're seeing a lot of new names. Lattice Semiconductors went up a lot, but the big leadership names, this is very similar with the tech sector. The big leadership names in the semiconductor sector are still below their September high. We're going to talk today about some reasons why I think that's going to change soon. Okay, but first let's just review Qualcomm. This trade worked out really well a few weeks back. September 30th, I said in 4 to 5 weeks. We just had a very basic bull flag, right? This was just a simple bull flag, nothing special here. Exactly what Apple and Tesla are doing right now. Clean, crisp bull flag, textbook definition, declining volume bars, confirmed bullish consolidation. Then we had a selling climax right here, right? A selling climax is a large volume spike that is higher than the average of the previous 2 or 3 months of volume, okay, which this one was. And the idea with the selling climax is that some people are irresponsible with their money and they will trade margin. Okay, so when you're trading margin, buying Qualcomm, at 110, 117, you might do your technical analysis and you might think that's a great idea. Well, if you do that with margin, it doesn't just matter if you think it's a good idea, your broker has to agree with you too, right? And so if you buy Qualcomm at 117 on margin and it falls to 110, your broker might not be as willing to, hold out that dip as you are. Okay, so when there's a selling climax, the reason, it's not just a bear trap, it's also that all of the longs that had their margin accounts forced liquidated get squeezed out, right? And a whole new set of buyers come in, just kind of like when a forest, the old trees catch on fire and the new ones are allowed to sprout up. Okay, so Qualcomm, I'll turn off this linear regression channel. But Qualcomm, perfect textbook bull flag, very easy, declining volume, bullish consolidation. You go to the equal legs target and time and price, which it did, 4 to 5 weeks. Clear bull flag. Clear pitchfork. It was a clear bull flag. I had this bull flag outlined in another post once this low was confirmed, and I posted that today. But this median of this pitchfork was reached. Okay, so this median of this pitchfork was reached, and we had this pitchfork outlined all the way back over here, right? So I had this pitchfork outlined on October 2nd. We're going to the median, and of course, surprise, surprise, we went to the median. So now we're going to talk about other stocks in the semiconductor sector, AMD and Nvidia. Okay, and the reason we're going to talk about AMD and Nvidia is because they have been lagging Taiwan Semiconductors and Qualcomm and all these other big names. Okay, another reason we're going to talk about AMD and Nvidia is one, Nvidia reports earnings this week on Wednesday, I believe, and also we're going to talk about implied volatility. Okay, so when you're an options trader, you need to know what the implied volatility of your stock is at all times. Okay, so implied volatility is the expected amount of movement in a stock. Okay, not necessarily whether it's going to go up or down, but just whether or not it will move. Okay, so if a stock hasn't moved for a long time, it's cyclical, just like everything else in the market. If a stock hasn't moved in a long time, then it has very low implied volatility. And implied volatility has big swings, okay? So when you have very, very low periods of relative implied volatility for a stock's options, that's the best time to buy, right? Because that's when options are cheapest. And then, of course, when stocks start moving a ton, their implied volatility goes to the upper range. We just use the 52-week range. But the stock's implied volatility will go to the upper range, and that's when the option sellers, will come in. And I don't sell options because, I don't, want to lose my house. But some big institutions do sell options, right? And they sell options when the stock has moved the most, all right? Most retail traders only want to buy options once the stock is already moving. So they're buying overpriced options. What you have to do is track the implied volatility. And so what we're seeing here we can do this. This is also the entire semiconductor sector, right? So I got a notification from a very, very good, I honestly think this is the best source on information on implied volatility, impliedvolatility.com. Make a free account. I'm not a spokesperson, but this is a very reputable, very informed website. Every options trader needs to be familiar with this. We're not going to do the calculation for the entire semiconductor, but what they're trying to tell me is that, hey, like if you're an option, person, you don't really have to pick a direction, right? The implied volatility of the entire semiconductor sector options are so low right now that you could buy a call and a put with the same strike and make money, all right? Because the implied volatility is so low that the increase in implied volatility would be the trade, right? Because options right now are super cheap. What they're also telling me is that Nvidia options are super cheap. Now, this is also important as a technical analyst because if options on Nvidia are super cheap right now, that's cyclical, right? So it will go from being very super cheap because the implied volatility is low to options on Nvidia becoming extremely expensive, okay? Now, I'm using technical analysis to say that the calls are going to be the ones that become extremely expensive. But the whole point is that you don't want to be selling options on Nvidia right now. And you definitely don't want to be selling options on anything in the entire semiconductor sector. Okay, so for Nvidia, we're just going to do a little calculation, see how we can kind of quantify implied volatility. So I'm sorry this video, takes longer than usual because I'm going to kind of introduce implied volatility to my videos. We're just going to do Nvidia for now, okay? So Nvidia, the range of the implied volatility, the lowest bound was 20, the highest bound is 140, and the current value is 54. Okay, so just, in your head, 54 is a lot closer to 20 than it is to 140, right? So just without even doing a calculation, I'm saying, okay, like it is more favorable to be a buyer of options on Nvidia than it is to be selling options on Nvidia, okay? And that also means that because implied volatility is at a trough, that Nvidia is about to move a bunch, right? That's another thing that is important to know is when will the stock start moving, right? You can use a selling climax, you can use Elliott wave theory, but another thing you can use implied volatility and say if we're at an extremely low range in implied volatility, then that's going to pick up because it's cyclical, okay? So we're going to do 54, the current implied volatility, minus the low bound, okay? So that's 34. So 34 is a very important number. Just remember 34, okay? The only other calculation we're going to do is the high range of implied volatility minus the low range, okay? So then we're going to do 140 minus 20. Okay, so that gives us 120. So then what you do is you do 34 divided by 120. Okay, what this does is it gives you a ratio of where Nvidia is in its implied volatility range relative to its 52-week high and its 52-week low. It's in the bottom 28%, right? So that means that it's a lot more favorable to be buying options, 25, 30. There are certain setups where you can find even like lower than 5%, ratios for straddles and strangles. But this right now is telling me, hey, options on Nvidia are extremely cheap relative to how much they usually are, okay? That also means that implied volatility is relatively low, which means that a huge surge in volatility is coming, okay? So that's how we know that Nvidia and AMD are about to move. Let's just get to some, the technicals real quick. The reason I spent so much time on the implied volatility was because the technicals here for AMD and Nvidia are extremely cut and dry, okay? Not going to take too much time to do these. This is just the bull flag, okay? Very beautiful, very textbook bull flag, okay? This move is 4 to 5 weeks. That's where we get the time target. This is also where we get the price target, okay? So this is the 4 to 5 week move. And then we have these volume bars that are declining beautifully, okay? So we have this range of price moving sideways and the volume bars are declining beautifully, okay? So we know that this is bullish consolidation because it's clearly digestion, right? During the sideways movement, the volume bars are going down. So what we then do is we look for these selling climaxes to be, possible ends to the consolidation periods, okay? And that's how we time our entries. So we have these big selling climaxes here that completely break this volume downtrend in the same way that price breaks the volume downtrend. So we have a breakout and back test of the bull flag. a beautiful selling climax, and we also have proof that Nvidia options are very cheap right now and implied volatility is very low. Okay, so what we do is we take the length of this bull flag in price and time and we place it here. Okay, so 4 to 5 weeks, we place it from the low, and that takes us to 688 in 5 weeks. Okay, so very clear, 688 in 5 weeks is the projection. The stop loss is the low of this candle. This wick right here is 522. So the stop loss for this is 522. The invalidation level is all the way down here at this low at 492. Okay, so a break and close below 492 would invalidate the bull flag projection. For this trade, the stop loss would be 522, and this is for me personally. And the target for the bull flag is 688 in 5 weeks. Okay, we're also going to look, I think I still have these Fibonacci levels up right here on Nvidia. I do. So this is why I added the linear regression channel to my tweet, was just so that I could fit this Fibonacci level right here. I might have to zoom out to the 1 year chart. Okay, yeah, so I use the negative 78.1% retracement, the inverted retracement of the correction as a very reliable next price target on the 6 to 9 month chart. So as we can also see, 683 is not only the bull flag equal legs target, but it's also the negative 78.1% retracement. So I'm extremely confident 683 will be reached. 5 weeks is the time projection based on the selling climax right here. This is looking really good. And then, AMD, very similar projection. AMD, we have an extremely beautiful pitchfork, okay? Same as AMD. This is what look at the average directional index off. This is a June 29th to August 31st. So this right here is a 2-month run. So this is a longer time projection than Nvidia, but it's also going to be a further price target, okay? Which is what you expect. When you have, more time, you're going to have a further move, okay? Same thing, right? Same thing as Nvidia. Beautiful declining volume bars after a bull flag run, okay? This bull flag goes sideways, the price goes sideways, the volume bars decline. So that's how we know we're taking another leg higher. What you then do is you look for a break in the downtrend of price and a break of the downtrend in volume to confirm a selling climax and provide a timing signal. This is clearly a selling climax, right? Way higher than any of the previous volume bars in the past 2 or 3 months. Definitely if you were an AMD, margin long, you got squeezed out. And if you were an AMD, bear, you saw this break, you thought, oh boy, finally, like I'm gonna pop the semiconductor bubble. No, you're not. Okay, you're not. But what you do is you connect the low with this high and this low to form a pitchfork, okay? And you check for these beautiful reactions on the median, right? So we know with 80% confidence, even without the bull flag, which gives us 90% confidence, but even without the bull flag, even without any sort of wave theory, and I'm not using wave theory in these videos, but we connect this high with this low starting from here, beautiful reactions on this median, beautiful reactions on this lower bound, or on this median line going horizontally. Okay, but the reactions on the median are most important. These are uncanny right here. So for AMD, similar projection, the stop loss is going to be 77. And what we're doing is we're looking for the equal legs target of 119 to be reached in 2 months.